This is the Daily Market Summary for Wednesday. I'm Mark Magnuson, and I'm joined by Maree Johnson of agmarket.net. Maree, how did we trade in the grains today? Of course, a big report day today with the WASDE report.
Sure, it was a big report day with that WASDE. We were green overnight and managed to hold on to that after the report came out at 11. September corn finished up 20.5 cents with a 4.57 settlement price. December was up 20.5 cents as well with a 4.80 3/4 settlement. The beans not quite as strong. September was up 14 cents, 11.65 1/4. November was up 14.5, 11.83 1/4. Wheat was the big leader today, not so much on the report, but overnight headlines out of Russia, Ukraine once again. September Chicago wheat up 22 3/4, 6.52 3/4, and then the September Kansas City contract up 21.5 at 7.20 3/4.
So, Maree, as you mentioned, we came into the office this morning and there was some green on the screen, particularly in the wheat, due to the escalation of the conflict in certain areas with Russia and Ukraine. And then as we got closer to the report, I was watching to see what would happen. The report comes out and we immediately see some price jumps to the upside. What were the biggest changes that were made in terms of those yield numbers or the acreage numbers that you think drove that?
Sure. So we saw yield reductions in both corn and beans. So the 183 bushel per acre yield number that the USDA has had on those reports is just kind of a placeholder. But they came in today at 180.7. So that was quite a bit lower than what the trade expectation was. We were looking for a 182 and change type number. I think 180.7 is very realistic at this point, and I'm glad the USDA went ahead and printed that. We did have over 1 million acres added in corn as well. So that, those two kind of offset each other. We had some changes to the demand that helped bring carryout numbers lower. Similar story in the beans as far as production goes. We saw over 1 million acres added. They trimmed yield to a 52.7. Didn't quite have the demand offsets there. So we did see the ending stocks number in soybeans grow, which pulled soybeans off their high. We had November up close to $12 on the overnights and finished at 11.83. So about 17 cents off their high.
Maree, I can already hear some of our viewers asking this question. I can just imagine what they're saying, but how do you think they did find those increase in acres of 1 million for both soybeans and corn? Do you think it's just the more accurate, real data that they have to look at, or is there something else that goes into that?
There's a lot of discussion right now going on within the USDA, particularly about the farmer-based surveys and maybe how some of the earlier reports, your March 30th, your June 30th, acres intentions and planted acres reports are calculated. This is the first report that the USDA puts out that incorporates FSA and RMA data tied to certified acres and crop insurance. So the acreage number from today is a lot more real, if you will. So we'll see in coming years. I don't think it's going to be anything that's solved, certainly overnight, but over the next few reports in a few years, how they change those earlier reports, how those calculations are made to see if we can get a little bit closer, because this is the second year in a row that we've had big acreage changes in August.
Over on the other side of the markets, flying a little bit under the radar today, but how did the livestock trade today?
Sure. Livestock was a little bit mixed. Cattle were sharply lower. Looks like we had August feeders down 382 to 346.35. January was off 560 to 315 even. Live cattle also lower. August down 217 to 230.57. February off 297 to 223.15. Hogs were a little bit green. Looks like October was up 22.50 at 83.55, and the February contract was up 67.5 cents at 77.95.
So could that simply be the relationship that we see sometimes where the grain price goes up and the livestock takes a downturn simply because of feed concerns?
So it definitely could be, if we're going to have a smaller corn balance sheet, and the balance sheet's not super tight yet, but it's moving in that direction. There could be a relationship there. From a technical chart perspective, the feeder cattle August contract had tried to get through a 38% retracement from high to low here for about 3 days, couldn't do that, and really pulled back today. So we could just be looking at technical chart traders here Not seeing anything fundamentally that's shifting. We are a week to 10 days away from reopening that port in Douglas, Arizona. So we'll have some more things to talk about anyway, as far as the feeder cattle market goes here before the end of the month with regards to the border.
So a lot to sift through here today. What's the best way for our viewers to get in touch for more information?
Sure. They can find all of our brokers at agmarket.net, or you can reach out directly to me at 641-638-6090.
She is Maree Johnson with agmarket.net, my guest here today. Maree, thanks for all the great information. Appreciate it, and have a great rest of the week.
Thank you, guys. Have a great week.